Hi everybody, thank you so much for checking in. In this video, we're going to go over Nvidia and we're going to answer the question that's on everyone's mind, and that's whether the stock is still worth buying after it has finally split. So if you've been paying attention to the stock market and you've been paying attention to our channel in specific, you know that we have been bullish on Nvidia since about 1 year ago. We did say the stock would go to 1,000 and we did mention that there might be a stock split. Now, of course, that did come to fruition if you've been paying attention. The stock finally hit the 1,000 mark. It reached about 1,200 before it split 10 to 1. And so now looking at Nvidia, it's trading about $120 per share. And many people are wondering, is it worth buying now that it is so much cheaper? Now, the stock's share price is one thing, but when we look at the market cap, it still remained above $3 trillion. Nvidia has grown so much over the last 24 months in terms of its price that it has overtaken Apple to become the second most valuable company in the world after Microsoft. So if you have been paying attention to the numbers, $3 trillion may be a little bit of a stretch for Nvidia's valuation, and the best way to compare it against competition is to compare it by the companies that are currently trading at the same exact market cap. The three closest ones would be Microsoft, Apple, and then Google. And so what we're going to compare now is going to be Nvidia's revenues versus Microsoft, Apple, and Google. Let's go ahead and pull that up here on TradingView before we jump into our price targets. For financials, on Nvidia's annual revenue, we're looking at about $60 billion. Now, that is an insane improvement from about 4 years ago, about $17 billion, but that's hard to justify the $3 trillion market cap. When we're looking at other companies that are trading around the same market cap, which is going to be Apple, we see that Apple is actually bringing in about $384 billion in revenue, which is significantly higher than what Nvidia is doing and what it could possibly do in the coming years. Of course, Nvidia's growth has been substantial over the 4 years, but it is very unlikely that the company will continue sustaining that triple-digit percentage growth in the coming years. Now, the next thing to compare is going to be their net income. Apple's net income is about $97 billion, so that is an insane profit margin that they're making off their revenue. Nvidia is also making a significant amount of profit margins. In fact, it's making about 50% in profits from its revenues, but it is still about 1/3 of what Apple is bringing in, making it harder and harder to justify the fact that Nvidia is worth more than Apple. The next company to compare Nvidia to is going to be Microsoft, which is the company that is taking the #1 spot in terms of valuation. Now, Microsoft is bringing in an annual revenue of about $212 billion, and their annual net income is about $72 billion. Obviously, right off the bat, that is also much bigger than Nvidia, making it even harder to justify the fact that Microsoft and Nvidia are trading around the same market cap. So what gives? Why is Wall Street trading Nvidia at such a large market valuation? And the reason why could only be justified by the fact that Wall Street is continuing to see growth in the coming quarters. When we look at what Nvidia has already done versus what they're expected to do, Wall Street and analysts are expecting Nvidia to continue posting growth. However, that growth is supposed to or is expected to slow down significantly. From 1 year ago to about the last earnings report that they gave, Nvidia grew its profit per share from 2.50 to about 5.80, which is going to be a 100% plus growth. But when we compare what they did last quarter to about 1 year from now, we see that growth is cut by half. So earnings and revenue are supposed to slow down and they're supposed to taper off in the coming quarters. What we do know about markets is that they are forward looking. Markets do not care about what happened, they care about what's going to happen. And the fact that growth is expected to taper off, yes, it's expected to continue growing, but in terms of percentage growth year over year, it's expected to taper off, which is going to affect Nvidia's stock price. For the short term, there's so much excitement that the company may continue going up. But if you are looking to buy for a very long period, you may want to be careful on adding Nvidia at the current price that it is at. With earnings growth expected to come down, we expect Nvidia's price and market cap to also come down with it in the coming months or even in the coming years. It's tough to say when the correction will happen. But if you are looking in the short term, we do have some levels that you can work off of. First and foremost, the highest level that Nvidia reached in the last 52 weeks before getting rejected was about 125.59 post split, which is its all-time highs. If the stock does break out, we do have a next price target that we are trading, and that's going to be around 1500 pre-split or about $150 post-split. We have been in Nvidia for a very long time. We have started our position since 475. We took profits on the company on its first two price targets. We maintained a little bit of our position for potential highs, but we are starting to become very aware and we're treading lightly in terms of the company's future. Yes, above 125.59, just because of so much hype and volume, it may continue rallying higher, but we do expect to see the company correct in the coming months or coming quarters. If it does break below 106.95, that's when the company can start selling off to fill its gap towards 97, so it would hit the double-digit range. And below that gap fill, the next available support is going to be 88. If the company breaks below 88, which was a very long, so you can see that Nvidia consolidated here for about 4 weeks. And so if buyers give up this position right here, which is this breakout, where you can see that Nvidia really took off, if they give up that support right there, then Nvidia can free fall, because all these buyers that loaded their positions into this breakout may finally give up or may seem a little hopeless, and they will give up their position towards the 75 mark. Now keep in mind, this is about a 40% decline from its highs, so it's not going to happen overnight. But if Nvidia does indeed taper off their market growth and their earnings growth, then we expect their stock to follow suit and start heading lower to adjust it to a more reasonable price. Thank you so much for checking in. We hope you guys check in for the next video. Best of luck.